Welcome everybody to the second session. Thank you for the people that is on, to the people that is online, for the patience, but we needed some time to refresh ourselves and to have a little bit of talk. One thing that is very important, and this is why BGIN is taking place here, is because we have a very active ecosystem in this country. And now we're going to have a session in which different people that is from industry to be talking excuse me, about initiatives and experiences in this space. And the first initiative that we're going to be referred to is one that was recently launched here in Switzerland. And it is as follows. You know that Hedera is one of the systems that is transitioning. It's not a blockchain, it's a DLT. It is transitioning from a closed environment into a new one, into an open one. And as part of this push, has established or is establishing initiatives that help the further growth of the community. And one of them is the Hashgraph Association. And I'm really happy to welcome Stefan Deiss, who is a co-founder and board member of the Hashgraph Association, an association that was established in 2021, at the end of last year, and he has many years of experience in the space here in Switzerland. He has been co-founder of director as well of the Swiss Digital Assets Institute, for example, among others, and he has a very long experience in this space here, and I'm really happy that he's going to present us the Hashgraph Association. Stefan, thank you. Welcome. It's here. Fantastic. You know this one. Exactly like this. And this is yours. And this one works as I click.
Okay, can you hear me?
Yes.
Good, good. Thank you everyone for today, and pleasure to be able to present the Hashgraph Association, established in 2021, end of last year. The main objective has been to be able to participate in the Swiss blockchain DLT ecosystem.
It was too optimistic.
So let's see if that's...
It was working before.
Okay.
You can use the... I will change it.
Okay, great. So the Hashgraph Association was established in close collaboration with Hedera Hashgraph. Hedera Hashgraph is governed by a council of 26 governing council members that endorsed the program that we've established in Switzerland. And these are the governing council members that are all behind the program that was established in Switzerland. And I'll go into the innovation program in some of the subsequent slides. Swiss Digital Assets Institute is working in very close collaboration with the Hashgraph Association and Hedera Hashgraph, and is endorsed by the Swiss government. And we established the Swiss Digital Assets Institute to be able to deliver an innovation program for Hedera Hashgraph, backed by Canton Schwyz, where both the Hashgraph Association and Swiss Digital Assets Institute AG are incorporated. Here's a brief statement from the Governing Council and Chairman of the Department of Economic Affairs in Canton Schwyz. In terms of the Hashgraph Association itself, the vision is really to foster decentralized economy to enable startups, enterprises, as well as government institutions to adapt, as well as being able to implement DLT across various organizations. Our mission is to raise awareness, but also to be able to provide broad adoption across the various areas of Hedera, and of course enabled through the innovation program that we are setting up. In terms of the core values, it's really around building an organizational culture that is based upon trust, integrity, as well as respect, and to be able to enable projects to develop their solutions using the Hedera framework. The governance structure is as follows. So you have a board of 5 board members. You've got 5 committees that consist of an executive committee that does all the day-to-day management and operations. You've got the grant committee that focuses on approving the grants, monitoring as well as managing the grants that are allocated to the various projects. You've got a technical committee that's focused on the whole technological aspects around the Hedera technology, and of course then an education committee, which is also in very close collaboration with the University of Zurich and other universities around the world. We also then have a promotion committee that is focused on being able to promote the use cases that we work on together around the world, and of course being able to share our best practices and lessons learned in that space. To the innovation program itself, it's a 5-year program. We basically received funding, grant funding from Hedera for phase A. We're actually in phase A at the moment. Phase A is going to be completed by the end of this year. It's a 12-month ramp-up phase. And as part of that ramp-up phase, we're engaging with various universities around the world, government institutions, various system integrators, various multinational enterprises, but also a lot of startups. And given our broad access to various venture funds as well as accelerator programs, we're able to work and onboard various startups that have very interesting projects to work on. As you can see, phase 2 is scheduled to commence in 2023. That will be based on an additional funding of roughly $50 million, and then going to $100 million in phase C. In total, over the 5-year period, we're talking about a total investment of about $165 million for the program. There's also a steering committee in place. This is needed so that we're able to have the right balance in terms of being able to provide all the different elements that the projects need when going through the program. So here we have a steering committee that consists with Hedera, the Hashgraph Association, and Swiss Digital Assets Institute. Swiss Digital Assets Institute is responsible for managing and operating the innovation program. And that consists of various areas, for example, onboarding projects, doing the verification of each project, understanding what the solution needs to look like, verifying whether they have the right team, talent, and time in place, but also being able to provide the grant funding that is needed for the projects. We also look at the technological aspects to be able to do the design, which starts with ideation all the way to proof of concept, and then developing an MVP so that they have actually a product that they can monetize and go to market with. We also provide training, which includes ideation, but also very much calibrating the right mindset in terms of what it means to move into the space of DLT and the whole blockchain space. Accreditation is something we work on as well with the various universities, and as mentioned before, promoting the various use cases out there that are developing very interesting projects. This is how the program is structured. It's over 3 phases. You've got stage 1, which is really between 3 to 5 days. That is where you have training, ideation workshops taking place. And once those take place, we create like a fact sheet so that we know exactly what the project wants to build in stage 2. Stage 2 is where you visualize and design your solution. We build a proof of concept. And then based on that, we then define a roadmap on how the project now goes into phase 3, which is the whole develop and deploy stage. Those 3 stages are performed over a, let's say, 6 to 12 month period. Depending on the complexity of the project, it could be completed much earlier. If it's a large financial institution that wants to integrate, let's say, a digital asset custody solution, then you're probably talking about a 12-month engagement period. These are the modules that the projects are able to benefit from. So we cover quite a broad range. It starts with, first of all, identifying and working on the business strategy, looking at the legal and regulatory compliance aspects. Much of the things that projects want to do may not be possible in the countries they are based in, which means we would then consider domiciling those projects in Switzerland, where we have the Swiss DLT Act, as well as being able to provide the legal certainty that these projects would need if they want to implement that. And as mentioned, the whole solution engineering through Hedera is key. We also look at the smart contract audits that are needed, as well as the promoting and marketing of those projects. On the right-hand side, we also support the tokenomics, the design of the tokenomics. Of course, many projects today want to operate in the metaverse environment. That's something we support as well. And then you have the DAO and DAC type organizational structures, something that was touched on, I think, earlier this morning. We support as well. And then, as mentioned, training and accreditation. And then last but not least, you also have to have evaluation and be able to produce a business case for the projects that are going through the program. And we also then continue with the advisory board and coaching of the projects. So here's an example of the onboarding and qualification process. To begin with, the request comes in. We then do the screening of the project, which requires going through a 30-minute interview with each project. And then we have a qualification go, no-go review within the team. Once the project has been qualified, they sign an NDA and an LOI, and then we perform a due diligence process, which also includes a KYC check. And then once that is all been approved, they've now gone through an initial review, and let's say they're vetted, and we all understand exactly what the project wants to do and where they're based, and of course, most importantly, what their plans are over the next couple of years. And then we then move into the grant approval process, whereby they would then receive the grant. For information purposes, startups get up to $250,000, enterprises up to $750,000, and government institutions up to $1.5 million in co-investment funding. These are some of the pre-qualified projects that we've been able to onboard just in the last 3 months alone. We've seen a huge demand and interest to participate in the program. And these are projects from around the world. And not all of them are based in Switzerland, but very much interested to be able to build out of those jurisdictions, but also leverage the Swiss DLT Act that we have, which is one of the leading regulatory frameworks out there. This is a training and education modules. We focus on really 4 key areas. The first 2 areas are really the basics, the blockchain DLT educational training, just introduction into what that actually means and what the business impact is. And then, of course, the whole cryptocurrencies, and then tokenization, and then today, the theme, which is the regulatory environment. These are some examples of the certification of completion that people that are going through the program are able to get in close collaboration, of course, with Hedera Hashgraph and the association. This is another one. This is for a certified Hedera Hashgraph developer. And then this is the last slide. This is what we're now in the process of moving into, where we basically are going to be participating in the Polyversity. This is a program by the Indian government, and we will be one of the first to be able to provide the innovation program as well as training in a metaverse environment as part of the Polyversity that is launched by the Indian government together with IDS and other institutions in India. I think that covers all the slides. Thank you very much. It was happy to take any questions, yes.
Your great presentation. Thank you very much.
Thank you.
I'm wondering, why have you chosen that structure for the program versus going completely decentralized, where projects are chosen, voted by the ecosystem, by the community? In your approach, it's the board ultimately that makes those decisions, and there are many filters in between, so you do retain a lot of control. Comparing, for example, to Cardano Catalyst project, where the community votes and chooses which projects to fund.
No, it's a valid point. And so we are looking at setting up a DAO type organizational structure that allows the DAO partners to select and vote on the projects to be onboarded. This is really just the setting up of the initial innovation program, but as it evolves, we will be setting up those type of decentralized onboarding models. So yes, that's certainly something that's on the radar.
Good.
Thank you.
Thank you, Leon. Then Ali raised his hand first.
Thank you for the presentation. You said, and maybe I got it wrong, all levels, they have to have sort of investments coming from somewhere else, or is it only for
It's only governments.
I got you.
Yeah.
Thank you.
Luis.
Hi, thank you for the presentation.
Thanks.
Regarding one of the slides that you had, like the steps for the approval of the projects, you didn't mention the timelines. What are the likely timelines for all these steps, the board decision,
The timeline is about 3 to 4 weeks from request all the way to approval.
Thank you.
3 to 4 weeks.
I have another question, Stefan.
Yes, please.
Yes, that was related to how do the different elements gear up? Because I would like to receive a little more information. For example, you have all this pillar that is around these 4 areas of education. Then you have the innovation program. How do you plan to feed one to the other? I mean, people that has been certified or whatever is more likely to get into the other acceleration cycle. Can you please? How this is going to work?
So you mean with the innovation program and
from the education to innovation, which is how are they tied together, the two?
Yeah, so what we try to do is we try to provide the education, but completely separately from the innovation program.
Okay.
But we also try to combine it. So if someone, let's say there's an enterprise, before they can implement blockchain and DLT, they need to first of all have the education. That's when the program comes in.
Mm-hmm.
But then they may just be separate educational programs that are provided outside the innovation program.
Okay.
So they're independent, but also combined.
Mm-hmm. Fantastic. Thank you. No more questions, people. We will continue talking to Stefan afterwards. Thank you very much for your presentation. Thank you. Then we move to the next presentation, and one thing that I like very much is always seeing people with completely different backgrounds that ended up doing things related to blockchains or some of its applications. And this is one of the things that we will also find now. The next speaker is Awin Tavakoli, who is a lawyer. He has a advisory firm here in Switzerland since 2017. As part of her education, she studied, a master's in law here at the University of Zurich. And before that, she had a bachelor in statistics some years before. So Awin, thank you very much. It's a pleasure. We have been together engaging, and we will have a series of events on NFTs that follow up, but I was very interested to hear her point of view on the Swiss ecosystem and all this percourse during this conference. Thank you, Awin, for coming. It's here. Yeah. And also this one is charged
Oh,
now.
cool. That will be it for me as I'm moving.
Fantastic. Thank you.
Is it on?
Yeah.
Can you hear me?
Yeah. Hi.
Okay, awesome.
And one thing. She's from this university. It is similar to your surname. She's,
Maybe you can help me with this. if
is
you
it
can.
related
this
in a
arm.
way your surname to this place?
Okay, awesome. So good afternoon, ladies and gentlemen. It's my pleasure and my honor actually to be here because I do not have only an emotional relationship with the University of Zurich and also because of my professional and academical background, but also it's an honor for me now for the first time to be presenting live about this topic in Switzerland after being able to or having the honor already to have presented in different parts of the world, including UAE, USA, London, and also Middle Eastern countries, a few Middle Eastern countries. Throughout the past year, after I was literally pulled into the world of NFTs, just if you would ask me like a year, 1.5 years ago, like January 2021, I would have asked you again, could you repeat again, come along? What did you just say? NFT, what does it stand for? But then as I started to learn about it, I just saw that the best way to educate ourselves is also by educating others. And we can teach the best what we want to learn the most. So that has been my mantra already for last year to have started the, let's say, most regular and also consecutive sessions, hybrid sessions throughout the whole 2021 for 40 consecutive weeks around NFTs, including their business, legal, and compliance aspects, as not only seeing them as opportunities and chances, but also seeing the risks and challenges of this new revolutionary trend. And it's already awesome to see some familiar faces here. It's gorgeous. And it started actually last year, me myself as a lawyer, but with an artistic heart and having a background in real estate, in mathematics and statistics, in professional sport, in academic, in teaching, presentation and entertainment. And then the legal studies came in and I said, actually lawyers like us are now required to take action, to step in, to step up, to speak up, and to start helping this community. Because as we know, with the launch of the NFTs, it was not only the wave of the innovation and also the revolution that came in, but also the problems and the challenges. And no new innovation or trend comes up without legal and compliance challenges as well. So as the legal industry has been always behind technology and innovation, I made it my mission to start helping the community, supporting and also educating them by educating myself. So enough to myself. Now let's get into it. Maybe just prior to the starting, I would like to ask you whether you are familiar, who is familiar in the room with NFT or who have ever heard of it? Doesn't work. Oh, okay, so I need to, with this one? Cool, awesome. Okay, maybe by the raise of hands, who have ever heard about NFTs? Oh, awesome. Then I'm talking to a room of experts, actually. It's a pleasure, so less work for me. And they told me I'm allowed to speak today for 20 minutes and I may shorten it down to 10. No, it's a joke. I can talk about this until tomorrow as well. So maybe if somebody can give us a definition, just also regardless of what you see already there, what do you understand under non-fungible tokens? You were the first to raise your hand. Selber schuld. Go ahead. Actually, it's cheating because it's already there, but
yeah, so I could
tell
talk
me
about
what
ownership, right?
I'm a nice teacher.
But yeah, we would say enforcing certain right access over a series of bytes. I think that would be the most low-level definition we could come up with.
The series of rights, you just tapped on the point that actually why the lawyers are now asked do something and to serve this revolution. The series of right, that's very good. Just keep it for us because we're coming back to that point. Anybody else maybe in one line? Apart from series of light, that belongs to him. I think you raised your hand as well.
From the technical side, it's a smart contract which defines a digital asset which is undivisible and unique.
Undivisible. Thank you. That was a very good one. And also the uniqueness, of course, the rarity. So, and one person maybe can tell me what is the difference between non-fungible tokens and just the tokens, like coins, like all the other digital assets? The name actually says it. Go, my old friend. We both come from the traditional banking system, but now we meet again after a few years in a blockchain event. It's awesome.
The name says, I mean, fungibility means like 100 Swiss francs bill, you can interchange it with another Swiss franc bill and the value remains the same. And this is fungibility. And non-fungibility means you cannot divide it into smaller pieces and you cannot exchange it without losing the value of it.
That's awesome. And actually, I would like to focus on that very first sentence of that 100 franc bill, if you can just exchange it very easily to others. What if that 100 franc bill has been signed by Pablo Picasso? Then it's non-fungible, right? You cannot, I mean, then the emotional value or the financial value as well for you, it goes far beyond the 100 Swiss francs only, because it has been signed by Pablo Picasso. For other people, maybe they can say, I wouldn't even pay 5 francs for it. I don't care who Pablo Picasso is. And for some people, they may say, that is for me worth hundreds of thousands of Swiss francs, not only 100 Swiss francs. So that is actually the component of non-fungibility. However, just this term has been raising a lot of issues and challenges also for lawyers and compliance experts. How far does it go with the uniqueness? When is something really unique? How many percentage shall be the similarity or the unsimilarity or the distinction between two different assets, two different tokens, so that it made them non-fungible and can be classified as a non-fungible token? The other thing was I think you said, which are not dividable and also not irreplicable. So that is something that they cannot be fractionalized and they cannot be broken into different pieces. Nowadays, there is a trend actually coming up that they are enabling people to have like a Miteigentum or co-ownership. So to have the possibility of fractionalizing digital assets as well, the NFTs, so that people can have like co-ownership. And then they can invest as a kind of group, as a team, to own a token. But that is not really yet the trend now. And also, as you said, a series of rights, I would correct you maybe to a series of codes as a smart contract, because when you buy into an NFT, you actually buy into a series of code. For a lot of people, that might be like a kind of, what am I going to own then? What am I going to gain with my investment? Well, actually, that explains it all, going back to the definition of digital asset, digital tradable asset as a token, apart from the component of non-fungibility. So you buy into a smart contract, actually, that secures you or that assures you the authentication of that token. It is not ownership of something physical. It's not something that you can hold in your hands, but it's something that you can refer to as the right of having a certificate of authentication of a digital asset that can be at the same time representing a physical asset. We'll come to that shortly, talking about real estate trends into the NFT world. And so sometimes manual, yeah. And actually on the title, a photo of this, I started like putting like athletic photos as well, because maybe one thing that we need to correct, the majority, what they understand under NFTs are just works of art. I personally have taken over the term creators or creations or the tokens or the assets instead of using them exclusively for art, because yes, the movement started with artists, with musicians, but it did not limit itself to the art. But nowadays, in the meantime, we see professional athletes have joined already. Now, in the light of the absence of the public events such as concerts, sport matches, exhibitions, auctions, charity events, and all of these kind of things that have been bringing people together. After the outbreak of COVID, people were missing them and also missing those social components of having the relationships with one another as human beings, as social animals. So suddenly it started like the encouragement and this wave of getting into this motion and revolution. Started with artists, yes, with the background and the philosophy of removing that perception of the starving artist. I personally did not become an artist because my family was saying there is no bread in art. Are you familiar with something like that? There is no money in art. Maybe you can just practice it as a hobby. Yeah, there's only money in law and medicine, yeah, in some kind of countries. I mean, in my own hometown, you say, if you're a smart kid, then you just go to become a doctor or to become a lawyer and maybe a banker. So in most of the countries in the world, this has been the perception of career for people and not becoming an artist. So this has like suddenly turned the page and said, who said that art cannot bring you money? Actually, it shall bring you sustainable streams of money. That is what actually another component of NFTs come into realization as the royalty and also the let's say forever income stream. So I think token shall be already a very familiar term for the people in the room, as already I saw that most of the hands went up, as I just mentioned. Who knows NFTs, and we all know that the blockchain is the layer for having these assets and also this series of codes recorded, no matter if you're just talking about tokens as tradable digital assets, or we're talking about another level, the non-fungible tokens, the rare, unique, indivisible, and irreplicable. So now talking about NFTs, actually, it's good to keep up with the pace, because now in this moment when as we are talking, new trends are already coming up. And some of you, has anybody heard about SFTs? SFTs? This is awesome. Okay, no, it's not awesome, of course, if nobody has heard about it, but I just wanted to emphasize the pace of this movement and this revolution. As we are already talking about NFTs, and we're trying to learn it and also identify the challenges or the opportunities, SFTs are already coming up, which are the semi-fungible tokens. And talking about sports and athletes coming into these platforms as well, these are about the, let's say, match tickets or even a concert ticket that first, in the first hand, once you own it, it's non-fungible, because the place that you're sitting, the price that you have paid, and that artist that you've been visiting, they are making it all unique and rare and non-fungible. But after this event is over, the occasion is done, where was that space, how much you paid for it or something, it still applies as your Mick Jagger concert ticket. So it is no longer really non-fungible token. It has lost part of that components as well. So the distinctions between other tokens we already discussed, also the non-fractionalization. And as for many of you, maybe it's already known what are the platforms that are mostly like favorable and the favorite platforms that NFTs are being traded on. I mean, the largest marketplace in the world, I think most of you know, belongs to which platform? Louder. OpenSea, yes. It was like fluctuating between 96 to 98% of the market share. OpenSea with like millions of users already from all around the world. And actually that has been making it so accessible and so wide beyond time and space for artists, or let's say creators from all around the world, despite of their origin, of their gender, of their whatever components that we want to like classify people by. Everybody could enter and everybody could trade their artworks or their creations. Another few, of course, Foundation, Super Rare Marketplace, they all have like different terms and conditions as well. And this actually poses also the risk. One risk and maybe one downward. The moment that we're talking about platforms for trading Does it ring a bell? Like something, because we just said, oh, this is awesome. Non-fungible tokens are giving the artists or the creators this freedom, this autonomy to come and enter this market and to operate on their own without any middleman. And, you know, and suddenly we see the platforms. The platforms, you cannot just trade this work from your wallet to the other wallet without going through a third party. So the third party risks already arise. And does somebody know how is the income generation model of these platforms by trading the NFTs? What does a third party or a middleman do? Yeah, right. So, I mean, that's their income model. They earn, they make their money, they make their living by taking percentage of the trading between the creators and the collectors. And with the registration or the recording of that artwork or that creation on the platform, which is called the process of minting, then they get their first fee. And then for some of the platforms, such as Foundation, which is actually, let's say, the VIP of NFT platforms, they charge also for listing. The moment you decide to sell that work, you put a price on it for auction, for buying, or for just having an offer or a reserve price or something like that, they charge you again another fee. Another fee is coming when you sell it. There's a settlement fee or the closing. You know, it's exactly like also the physical world, the contract, that first you agree upon something, a purchase of shares, or let's say sales and purchase of your stuff. But then there's a closing. Does somebody know we have lawyers in the room? Do we have lawyers in the room? We don't.
The lawyers are embarrassed to confess.
No, I'm kidding.
There are.
Okay, but maybe somebody who is like into contracts or sales and purchase developments, maybe of a real estate, of a car. What is that first? I mean, you have a handshake, you have an agreement, you have the offer, you have the counter offer, acceptance, you know. And then there's one last part, which they say an agreement is not closed until, for example, XYZ has happened. So that's the closing part. Maybe for companies or for corporate, let's say, mergers and acquisitions, you have all of those due diligence, the inventory, the lists, and all the let's say, the components that belong to the enforcement and to the closing of that contract. And that part is called also settlement. And there's a fee also for settlement when you sell your work. A collector is collecting your work, let's say, as a creator on an NFT platform, then one of these parties are to pay also a settlement fee. And this is actually not something which is fixed. It can be agreed that creator, I mean, I don't call it artist, as I said, I say creator, because you can be a real estate agent and having your real estate properties as NFT, or you can be a painter or a photographer, or the collector or the person who is collecting that work or that asset can pay the settlement fee. And as soon as that fee is paid to the platform, of course, then deal is closed. So the transfer of the ownership has taken place officially. And again, the transfer of ownership is about the transfer of ownership of those series of codes and rights. It's not like one groundbreaking project, because a lot of people have been talking about, oh my God, there are like astronomical numbers or money is being turned over on this platform. Last year, March, I think most of you know about it, the most groundbreaking deal of all times. I mean, all times throughout the year, the age of 3-4 years of NFTs. $69 million was the work of the 5,000 days of people. But as people were trying to digest this one early this year, we had already the merges, which was sold for $91.8 million as well, which made another second groundbreaking a transaction into the world of NFTs. Why we are talking about these numbers, and actually one point that raise another question, again, talking about middlemen, third parties, platforms. Now here we had the work was sold by Christie's. So the initial idea of the blockchain and also NFTs was that the artists are being, you know, they have this autonomy. They have the authority upon their own creation and work. And they are here free from any influence of middlemen exhibitions, auctionists, etc. But then we had the work, actually the most expensive one, sold by Christie's. So we see there is a lack of business acumen as well that creates, again, new opportunities, new business opportunities, or new jobs. You know, lately we have been informed that almost 16,000 new jobs, new titles of jobs. After now having heard the presentation of Stefan about metaverse, they're just being created around these new technologies. Because a lot of people are afraid. I know it from a lot of our, let's say, lawyer friends in the legal industry say, oh my God, with this rise of the smart contracts, then who would come to lawyers for contracts? But no worries, you will be still needed because smart contracts create disputes as well. And of course, smart contracts are not, I mean, I'm disclosing this afterwards to you, what are the downwards and onwards also for the smart contracts, that still the role of lawyers and especially advisors will be pretty significant in this world. But there is something that I always mention it also in the legal presentations. These people, as the users or the players on the blockchain layers, as creators, as collectors, they actually don't want us. They don't want laws. They don't want lawyers, as cute and sympathetic as we might be. They hate us. They say we entered this world to get rid of authorities, regulations, laws, lawyers, and big brothers watching us. We want to have autonomy and authority over our own assets, our own transactions, our own relationships, and of course, risks and challenges. But this applies until they have a conflict, actually. So no worries. There will be still the need for different professions that are already existing in the classical world. We have some numbers, and why am I mentioning these numbers? I mean, 2020, the NFT market closed with $200 million, 250 million, sorry, dollars. And then we had only the first half of 2021. We were talking about larger numbers. I mean, 2.5 billions. So the numbers are like going to the moon. And first half of, by May 1st of this year, $37 billion. What the heck we're talking about? Talking about these astronomical numbers, what does it demonstrate as risks or as legal or compliance issues? It is not only cool that big money is millions and billions are turning over and some artists are becoming rich, which is also a perception. I'm going to break that perception as well shortly. But what kind of risks are these numbers already demonstrating? Come again? Sorry? That's exactly also the financial side. And one more. Thank you so much. Yeah, now we're coming into the financial crimes, right? Wherever we are talking about large numbers, exciting, attractive, but at the same time, we're going to pose risks for scammers, for fraudulent behaviors, criminals, tax fraud. Now we're going into some of them in a little bit. So just talking about numbers again, some of you know actually about these two very prominent projects that have been now really shaking the whole NFT world. And as everybody thinking, oh, this is going to be a bubble or this is going to be finished, they're coming up with new ideas. I mean, I have something for you actually. Are you familiar, I think, with these apes that everybody think, oh my God, how on earth would you pay for something like this? Hundreds of thousands of dollars or sometimes millions of dollars. It is not about the ape itself. I mean, there were like 10,000 pieces. And then this project and also the second prominent one, which has been the CryptoPunks, they are known now the most two prominent projects of the NFT markets, 10,000 each, and then both made throughout 2021, over $40 million turnover. So again, these numbers are posing risks as well. But what we want to say is not the component of these faces or these things being cute or something. It's about the uniqueness. It's about the series of codes that you're paying for. And there are 4 components that make NFTs actually extremely attractive and also very influential in the world, the number one is community. Most of these people, they are buying into these projects, they pay hundreds of thousands or millions of dollars just for the sake of having access to an exclusive community. They want to be a part of that Bored Ape Yacht Club, or recently launched the Ape Rave Club. Were you informed about the performance of that ape in last week in Belgium, in one of the largest, I mean, I say one of the largest, everybody said the largest rave party in the world, but for me, it's still the street parade in Zurich. So I said in one of the largest rave parties, yeah, there was an ape DJ who was performing. And why are they doing this? Again, like funneling up people from the physical world into their world as well. They're collecting fans again, collecting collectors. So they have built already this transformation between the funnels of the physical and the, please don't look at me like this. Is it finished? Okay. I was just warming up. Okay, thank you. Because I remember for everybody else was you were standing up, it means it's over. Anyway. Why NFTs are so attractive. So it's a good cheating time because I wanted to actually drop the question, but as I saw Claudio stood up, I said, okay, I'm going to reveal it right away. So it is one of my rare slides with so much maybe text or content, because I always believe that slides must really keep minimal and keep the attention to the person who's delivering the content. But this one, actually, I couldn't help putting them on because these are really the attractions of them, you know. What would be something, I mean, this has been always the dream of humankind. Like for a lot of us, the Kunsthaus, for example, Art House in Zurich, Art Basel, awesome exhibitions, they're all happening behind closed doors. And you know, the ever dream of the human being has been always to roam beyond the time and space, to have access and to have no boundaries, right? And when you have your artworks or when you have your collection stored in your wallet, and what is your name? Louis. And maybe I'm just passing by Louis and say, hey, Louis, nice to meet you. And then I happen to get to know him as an artist or maybe as an animator or something. Actually, I have a project at the moment going on. Would you want to collaborate with me? I can just quickly share my wallet and my projects with him and say, this has been the recent artworks that I have been developing or I have been working on. I'm interested in a collaboration. Are you in? And he said, yes, we connect wallets. We start a collaboration and then we create something, and then we can be minting on the NFT platforms while we have the wallet shares, technology, etc., that already shows us how the way of our collaboration is being defined, etc. So that is this accessibility and being understandable and accessible for everybody at any time, anywhere. You don't need to invite your guests or your friends to Art House or to your home maybe to see your collection. You can just take out your wallet and show it to them in the plane, in the train, in the streets, in the club, and you can close your deal right away and have the transactions of the money within seconds. You know, so these have been the things that have been already making this extremely accessible and also very attractive and very exciting for people. Of course, platforms are there, but still the creators have the possibility to be there on an autonomous and authoritative manner without having anyone, but that's their choice if they want to also engage someone, as this is now have been a very interesting opportunity for a lot of people who have been doing art advisories or art consulting in the physical world now to curate NFT art projects. I personally have been curating like 2 major projects. One of them was the first traditional musician from the Middle East, and one of them was also the first national team of Iran basketball player who I had the honor to bring him into the NFT world. And then for these people, I mean, he is just happy throwing that ball and then making that excitement for the audience, but he had no clue, not about the technical parts, about the business parts and about the legal parts. For example, we had that picture of him with the US basketball player, and then that made really like huge publicity as well. And we called it Unity because it was exactly going beyond time and space. Some problem-solving tools, I'm going to be very quick here. I mean, we have in the physical art world the challenge of identifying the origin. Now you're serious, I know. It was a different look. Identifying the origin of the work, but once you have it stored on the blockchain, you have less concern about those kind of things. The status is very clear. Is it owned by someone? Is it on an auction? Is it like just minted there is it for sale at all or not? The ownership issues, who owns those series of codes, not series of rights, but the right of ownership about those series of codes. Authenticity, of course, that is like a Rolex, for example, certificate that you receive. When you get that Rolex watch, it has nothing to do with the watch you're wearing, but it shows that you are the owner of this number series. It shows the authentication of your ownership. And of course, exclusivity, which goes back to the rarity, uniqueness, and the level of trust, because this is funny because I've been also serving the NFT community as lawyer, not only as educator and also business advisor for a lot of them. And I got sometimes presents like tokens, which were being created for me as this was a Persian cat collectible, a very successful project last year in OpenSea. And that was, let's say, instead of fees, because I was helping a lot of people free of charge, actually, and I created the contract for their collaboration and co-creation, and this was the cat lawyer that they created for me. We just mentioned those few components of the NFT world, utility, community, rarity, and liquidity. These are the components that you ought to choose your project or your investment on, but they are also bringing risks, because if we're talking about community, we're talking about collaboration, co-creation. Most of these people do not have a contract between themselves, and then at the end of the day, it can create a lot of problems when it comes to the money, especially, you know, the moment that money rolls in, the friendships and everything's and the love and everything's are under question mark. Most of these people who are creators and on this platform, they have no business acumen, no legal acumen, which is totally fine. You cannot be everything in your life, but that is exactly where professional curators, advisors, lawyers need to come into place. And also conflicts. That's a huge problem because of a lot of courts that are not having the knowledge to serve the dispute resolution in an efficient way. I wanted just to show you maybe a real life example just to close this, because I had a few case studies to present for you, but maybe we can postpone them to another session.
Absolutely.
That gives us
Longer
all
one.
the reason to continue with this.
Longer one.
Real life example, maybe you recognize me. That's a 3D model of myself made by one of the most prominent 3D and animation artists in the world. So this is now, let's say, the nude status, but we have created actually these components of time and space. The first, let's say, facet of my personality as a warrior, we created the warrior of the ancient times, the one in the present times, in the middle, and also the one from the future, which you can see what kind of precision and technology is being used in this artwork. And these are like all full 3D. And if you have a camera turning around it, you will see even the pores on my skin. So this is the first facet of my character as well, but the next one is the sapien, which is being also created. The next one will be the sovereign, and then the people, which will be all divided into different times of the life. Why am I saying this to you? Because if you want to operate as an advisor, as a lawyer, as business supporter, or as anybody to collaborate or to play a role in this platform, you must have this skin in the game. People who are coming to me for legal advice, as soon as they know I have been creating myself, I have been collecting myself, I've been curating myself, the level of trust suddenly goes to the moon, because they know I understand the game as well, including the risks, the chances, and the challenges. So case studies will be postponed for a next time.
Absolutely.
And data privacy, I think you're covered it already amazingly, because I had some challenges also to have him talk about.
We need to
and
move
then
on.
we need to break it down here, and hopefully for the next time.
Absolutely. We will
Thank
come.
you
Thank you very
so much for your attention.
There is time for one rapid question. Ali, thank you very much.
I had in the past a professor who was saying always, okay, does anybody have a question? Yes, please keep it for themselves. No, it's a joke.
I love all of this. What I want to say is there is another quadrillion opportunity missing. I just had this post from a friend of mine, former Fed economist, working with credit unions in the US. to take car titles, make them NFT, so then you can basically have a full DeFi car loan operation. It's about asset specificity. When asset is specific, then it cannot be in a sort of a standardized contract, which basically means every house, every car, most real assets you own are actually NFTable. So the art market compared to that, as big as this
It's
is,
nothing.
that's right.
It's nothing. And actually the art only defines 12% of the whole NFT world, let alone real estate, cars. I mean, today I was informed about the third round of NFT of Lamborghini. So yeah, the first round of it was created by the prominent Swiss artist, Fabian Offner. And they created like 5 tokens, which were like groundbreaking. It was beginning of February. Porsche joined already. McLaren sold already 1.5 months ago, all their pieces. And it shows actually that the market is something big. Otherwise, Lambo or Porsche or something, they wouldn't have risked their credibility to enter.
Thank you. Last question, Luis.
So quick question. I'm interested in like the side of the rent on the NFT, the royalties. Is there already any study or any insight regarding what are the most profitable ones in terms of rent royalties and let's say usage?
You want signal? We're not providing any legal or financial advices here, but as I just mentioned to you, consider those 4 components of the liquidity, the rarity, the community, and also the utility of any project that you find the more profitable. Because if you see what community is behind it, I mean, for example, Bored Ape, when you know Madonna or Jimmy Fallon or Justin Bieber are already Bored Ape owners, you think, there must be something in it, so I'm going to join it. They create already for you that credibility as well. Who is behind it? Who are the community members? And for you, then there will be a huge utility if you are a member of a yacht club that maybe next month you will meet Justin Bieber. I don't know who likes or who dislikes. It's not about that. But if you have access to those kind of people, it's like your access key or your code to access to an exclusive community. That's called utility. And then you will check out the amount of their liquidity. You will see all of those information where they are minted and the project. You see how much have been already the turnover, how much has been made already out of those projects. Has it been profitable? How many owners do they have? And of course, the rarity, because if you think that, I mean, all of these apes, they have their own unique code. They cannot be replicated or copied or replaced by any other ugly ape in the world. So of course, those 2 are the most profitable. They are the prominence in the world. But for other projects, if you want to identify them, always bear in mind those 4 components: utility, community, rarity, liquidity.
Fantastic.
And
Thank
if
you.
you want a profitable, come by my project.
Thank you.
That's a signal.
Thank you very much, Awin,
Thank
for
you
the
so
presentation and for
much.
enthusiasm
So,
to
yeah.
discuss this topic. We will be able to continue our lunch, most likely.
Awesome. Thank you.
Fantastic. Thank
again.
you. And just to conclude this session, and I thank the speakers' patience because we started a little bit late. It is for me a pleasure to introduce you Alessandro De Carli, who is a co-founder of Papers AG, which is a Web3 venture builder. Alessandro started as a mobile security engineer servicing many financial institutions worldwide. He later realized that the need of safe knowledge in the crypto space and open source the wallet AirGap. Once the stepping stone of secure self-custody was achieved, Alessandro moved on the next milestone, which is the money revolution into the space of sustainable decentralized finance. And now he's in Papers, and I would be really happy to learn more about it. We will all be. Thank you, Alessandro, for joining.
Fantastic. Thank you, Claudio. And I will, yes, bring you through this journey that we actually also went through. And if there's anything that you should get out of this presentation, it should be that you actually see how we're still at the very beginning and how things are starting to get faster and faster. So my name is Alessandro De Carli. Claudio has already introduced me pretty well. Co-founder and CEO at Papers, a Web3 venture builder. Now, the journey for me actually started with traditional financial institution and also for Papers, moved on to provide this technology to the actual world outside of the traditional finance, and then move into the DeFi space and ended up at Accurist, where I'm currently working at. But let's quickly get into the detail here. So basically it's 2015-ish, and I'm starting as a mobile security engineer at Credit Suisse. It was very exciting because now new devices that are in the hands of consumers get more and more push from the consumers, but also from, so consumers being employees of the firm, but also customers of the firms to be able to use this kind of technology with the bank. So mobile banking, one example, but also being able to give consultancy over portfolios. Yes. So the company was then very much challenged with the thing of how do we now secure this device so that it can in the end be used for large transactions. And the reason why I'm bringing this up is because you kind of see how a new technology pops up and the consumer then starts pushing. And we were there to build up a company around this and offering mobile security services, not only for Credit Suisse, but also for various national banks. At some point as well from Credit Suisse, I got to know a couple of people that were very much into crypto and saw that there was actually a burning need to create a tool where people could actually take over the responsibility themselves of providing secure self-custody. So if we take a look at traditional finance, even before we heard that this intermediary in that case is the bank. And if we now fast forward this to the new world, if you want to send as Alice money to Bob, there is no bank in between, but there is a protocol in between. And this protocol might be sharing some of the fees with the network, might do other things, but in the essence, there is a protocol that is technology, and through cryptography, now all of a sudden we're capable of sending money from Alice to Bob. What is falling away is this kind of human or person part, right? The bank is no longer there. And what is falling away is also the ability for Alice to call someone in case she forgets the password, she thinks something is wrong with the account, and so on and so forth. And you know the saying that with great power comes great responsibility, because now all of a sudden you have the challenge that you need to give these people the tool to be able to take on this responsibility of self-custody and make sure that their digital assets are safe. Now, some people might say, okay, I just buy peace of mind, I just buy a hardware ledger and the whole thing is done. The problem with these kind of solutions is, and we see it here very clearly, is that you still have a wired connection with between the private key and the outer world. If your laptop, for instance, is connected to the internet, any process on your computer, if it is infected, is capable of reading the power consumption of the ledger and basically extract the secret in case you were signing a transaction with that infected device. So we said, okay, this is obviously not the solution that we think is going to really allow people to live and take on this responsibility. That's why we took a very much well-known design, which is called air gapping, and basically separated physically the thing that is managing your secret from the thing that is talking to the outer world. And the only way of communication is through QR codes. So, okay, we started with traditional finance, now went on to take the challenge of actually giving someone the tool so that they could really take on this responsibility of doing and performing self-custody. And on another note here, everything as per Web3 philosophy, should be open source so that everybody can verify it. And basically, this is also the case with AirGap. I will not get into the details of the solution. If you're interested, we can talk about it later. So at some point we said, okay, now we have all these cryptocurrencies stored on your wallet. You have a self-custody solution, and that's all exciting, but what comes next, right? People want to be able to put their money at work, right? And actually with decentralized finance, this has become a reality. And it's also then for us the next opportunity where we started to build up. And we launched a decentralized finance platform called Advis that would allow for collateralized borrowing and lending. It was actually quite interesting that the gentleman before mentioned the use of NFTs as collateral, because this is actually quite exciting and a revolution on itself. So people can now all of a sudden say, I want to lock up my Bitcoin. So a Bitcoin miner can say, I want to lock up my Bitcoin and pay my electricity bill without selling my Bitcoins today because I think they're undervalued. So what they can go and do is basically lock up more Bitcoins than the loan that they're getting, and then pay back that loan at any time. What also happens is that with every loan, you have an interest rate, right? So all of a sudden, the counterparty can just be there and say, okay, US dollars, I hold them anyways, I might as well just get an interest on it. And that's on a very high level how this works. And it's very efficient because it's a closed system. Nobody takes a spread. So if someone is paying 8% on the loan that they are getting, and by the way, the percentage is something that the market decides because it's all a system that calibrates itself based on the interaction from the user. But if someone is paying those 8%, these 8% go to the people that are actually financing that loan. And it really allows to create very attractive tools that are also attracting very many institutions. We're also working with a couple of traditional brokers that are basically using this as the backend to be able to offer to their clients in the front any sort of products. So cool. Here we see again how the closed system actually works. And if you have more questions, I'm very happy to get into that at a later stage. Now that we have built a self-custody, we have built a way for people to actually put their cryptocurrency in use. Now we can even move one step further, and with Accurist, we created something that would allow you to basically monetize any sort of data that you have. It's privacy preserving, so fully GDPR compliant. But what it's actually doing, it's using a trusted execution environment. So it's again very much technology driven to show to the world a transparent way how the data is being fetched, how the data is being computed, and so on and so forth. And the industries that can profit from this are, of course, huge. This should also be of interest for you in case you're looking at where the market is going, because I'm convinced that, yeah, Web3 is kind of a revolution that has kicked off and is at the moment also pretty much unstoppable, no matter what the current crypto market conditions are. Yes, so that's then what we started building on, a way to bring basically data from any sort of use cases, be it IoT, parametric insurances, DID, KYC stuff, everything that you want to somehow be able to use in the Web3 world you could then basically use this system and use the technology behind it, which is this trusted execution environment, to do it in a Web3 compliant way, right? Because you don't want to end up in a situation like with Chainlink, where you, instead of having a truly decentralized system, you just put trust in some parties that give you the data. You still want to be very verifiable on the how the data comes on chain. Cool. I know everybody's hungry, so I will keep this very short, and I will of course be here to answer any questions later on. But I think it's very important that if you plan on building something or plan on doing something in the Web3 space, what does not work is saying we just do the Uber for, and then you put whatever thing you want to say, and then that's a perfect use case for DLTs. I think you have to be very much in line with this philosophy of having a decentralized system organizing itself through a set of rules, which is the protocol that they built on. And never trust, always verify is definitely one of those things. And transparency and resiliency are kind of given, but it also means that you're not fully in control. So your business case must take this also into consideration, because if you end up with a kind of hybrid, half-hearted solution, you're better off building everything with a centralized system. It will save you a lot of headaches. And the path to payment is very, very short. Basically, everything is transactions, and you can just attach logic to those transactions. And key learnings, this is my last slide. The thing that I see is really that I've been now in this industry for quite some time, and with every wave, more people start joining the thing, and with every wave, the whole thing starts becoming more of a self-fulfilling prophecy. And there is a lot of hype, there is a lot of misinformation even, scams, you will never get rid of those. However, if you get the paradigm shift behind it, and if you want to onboard and basically surf the wave, I think that we're still at the very beginning, and there's still a lot of unsolved challenges, as we also saw here. So thank you so much for your time.
No, thank you. And thank you for keeping the time. Leon.
Thank you. Do I understand right that you use multi-party computations in your platform? And
you're talking now about Accurus.
Accurus, yes.
Well, it's using a trusted execution environment, which is basically a chip designed specifically to just be fed a set of instruction, and whatever comes out of it is an output that is linked to the execution cryptographically.
So you don't use MPC?
You can use multi-party computation with this underlying thing, but it's kind of independent.
And the TSS or secret sharing, threshold?
Shamir secret sharing.
Threshold security scheme. Sorry, a threshold signing scheme.
I mean, this you have for the solution that I mentioned before Accurus, actually, on AirGap. This is built in so that people could really start taking over this way of creating backups over their secrets by basically splitting it up in how many parts they want and define a threshold for it. So I think this is very much, also a technology that kind of deserves a lot of attention and solves a real world problem for the user. Yes.
Thank you for the answer. Is there any other question, people? Do we want all to jump into thing and continue there? Perhaps this is the case. Thank you very much. Once
Thank
again
you very
for
much.
participating. Thank you.
Take care.
And thank you people for keeping the pace today. We will do our best. We have an introduction to Bloxberg at in principle at 2. Okay, I will try to convince the speaker that we start 2:10. Okay, it's actually. Bloxberg is a academic blockchain that tries to build a network with as well automated governance to some level, but it's also trying to embark other universities worldwide to be joined by that to join it. So it would be interesting that we present, and this is going to be before the closing words by Shinichiro-san. Okay, this let us say, I don't hold your breath, but perhaps we can meet once again at 2:10 here.